There's a couple of different things to pay attention to. We did have the, what do we call it, the Putin and the Trump situation. So they had a meeting, I think it was Alaska? I think it was Alaska, the location doesn't matter too much. That was on Friday evening, night, depending on where you are. So just to quickly run through that, there was no deal made. So there was no real update between Russia and Ukraine. However, there was the sentiment that it was a positive meeting. So both of them, Putin and Trump, both agreed that it was a productive meeting between the two. It comes out, Putin wanted control of Donetsk, I might have pronounced that wrong, and Luhansk. Again, I can't pronounce these names, very bad at pronouncing foreign things. Ukraine has obviously rejected that, so essentially Putin wanted to take control of two of the Ukrainian locations. The other thing is Trump's undertones are more supportive of Russia than Ukraine, and this isn't anything that he said directly, it was more the tone and the wording, and this isn't just my consensus, this is consensus throughout a lot of news articles as well. That Trump is siding a little bit more with Russia, saying that Ukraine should make a deal and not Russia should make a deal. So they are framing Russia as the stronger power, which of course they are. So that doesn't really mean too much, but of course, you know, little things do help. So there's no updates on the sanctions on Russia, but again, having a productive meeting could lead towards having possibly a revision of sanctions, if you will. The next thing is Zelensky is meeting Trump in Washington on Monday, so we will also have we'll have both sides of the argument, I guess, really. However, we didn't really get much. It was a very sort of closed door meeting. There was no press conference. There wasn't really anything for us to trade off specifically. So all in all, there was very little in terms of market movers, in my opinion. We could see a little bit more risk on, again, just leading from that sentiment that we had a positive meeting between the two. But there is just no way for us to say that there's going to be a peace deal just yet. There definitely could be. I'm not ruling it out. I'm just saying that's not the situation right now. So with that in mind, it wouldn't surprise me if we do see some sort of corrective pullback on gold or just some sort of risk on move on gold here, possibly back into these lows. This is what I was discussing on Friday. I put a message out saying I'm looking to buy gold at the lows, and this is basically the idea. So I'm looking to buy gold at the lows towards let's say 32.67 roughly, with a loose take profit at these previous highs. Now, the reason I say a loose take profit is because if there is any escalation between Russia and Ukraine, we could obviously see quite a large risk off move, specifically within gold. Now, I'm not betting on that. I'm not going to say that is happening. So if we do reach these highs and we don't see any escalations, we don't see any continued catalysts to drive gold higher, then I'll be happy to take profits. One thing that we should note, though, is we can't just look at this this situation between Russia and Ukraine, because it's at the minute it's kind of a dead cat or a dead horse, whatever you want to call it. The other factors around gold are obviously the weak US dollar that we are seeing at the moment. So the US dollar is not doing too hot. We are getting an increased bet of Fed rate cuts in September, and possibly also into 2026, and of course the other meetings in 2025 that we do have left this year. So those Fed rate cuts are a big weight on the dollar, and obviously in that case we are looking for gold to start appreciating further. So I'm looking to buy gold on dips. I think that's a pretty bread and butter way to look at this. The other option on gold, of course, as I said, if we do see higher highs getting made and we do see these previous highs getting broken, we could look for a very simple break and retest here to possibly scale in or to re-enter if we've already taken profits by that time. I am actually already in a gold position. I didn't want to call it though because it was very aggressive. I actually entered just at these highs here, and this is very, very small positioning, sort of entering a dollar cost average, but not anything like my euro dollar positions. It's just one or two positions I'm willing to take there. The second position is the one I just mentioned down here, so that one will be called, so don't worry, you're not missing out on anything. Euro dollar, I would love to be a buyer on euro dollar. We were looking at this last week So if anyone remembers, I put an Instagram post out and we discussed it as well in the webinar. Unfortunately, I never got tapped into this, so I had an alert set. I wasn't paying attention because I was traveling at this point. My alert never got hit, so I wasn't aware. But unfortunately, or sorry, I should say, I guess fortunately, my idea was pretty spot on, but yeah, didn't manage to capitalize on it, sadly. So I am looking to I am still looking to enter. Excuse me. And this is, of course, supported by the Fed rate cuts that we are anticipating. We've got the euro is supported by inflows into European bonds. The Fed independence fears, that's again another one on gold that I didn't mention actually. So with the situation between Trump and Powell, and that whole mess, we're not going to go into that right now, I might make a separate video on that. But there are concerns that the Fed's independence is going to be challenged over the coming months. We've got cautious optimism around Trump and Putin, of course, and we've got quite large bank alignment here as well. So we've got Refinitiv, Bank of America, and Morgan Stanley all in long positions on euro-dollar. So similar to gold, I'd be just looking to buy dips. I'm not looking to do anything complicated here. Any sort of pullback we get, I would be quite happy to be a buyer of euro-dollar at some point. So ideally, we're looking here for our 200 moving average to act as a dynamic support and also an opportunity for a mean reversion. So nothing, not a huge mean reversion, obviously just sort of pull back to the 200 as it acts like a magnet, like normal. And then we're looking for a continuation to the upside. I would be quite happy to target towards 1.2, maybe 1.15, something along those lines. So towards 1.12, we'll say, but that's not a hard level because we've discussed it previously, but some of you may have forgotten. The ECB has basically said that 1.2 is their threshold. So they're not concerned about the value of the euro at the moment, specifically compared to the dollar. What they were concerned about, and this was back during this point here after the massive rally that we had in euro dollar, they were concerned about the speed, not the price. But then they went on to say that they're not really too bothered. I'm paraphrasing here, of course. They're not really too bothered until it reaches 1.2. At that point, they're going to be a little bit concerned, as that does start creating problems between import and export, and of course just general exchange pricing. So there is that. So euro dollar, I wouldn't expect it to continue rallying above 1.2, but I think up to around 1.2, that area, I think we're pretty safe for potential longs. Now, pound dollar is tricky. I am leaning a little bit more towards being a buyer. However, the issue I've got with the pound is, although we had a relatively hawkish cut previously by the Bank of England, I'm not really very happy with the fundamentals, especially against the US. So if we do start getting better data for the US, whether it be NFP, unemployment, inflation, whatever it may be, something that might rock the boat and provide buyers a reason to get back into the dollar, pound dollar still has a massive way down. You could say that you could make the same argument for the euro, but I think the euro fundamentally is much stronger than the pound dollar, so it would suffer less in my opinion. So pound dollar is an option. If we do get the pullback, I will take it, but I'm just not as optimistic on pound dollar as I am on euro dollar. We can go into sort of the edge finder and things shortly. I just want to get watch the stuff out of the way. As I said I've been saying it last week as well, but I'm only on one monitor at the minute because I'm traveling. I'm just on a laptop. So if you've got questions, drop them in the Discord chat, obviously on this call, not in the general chat. And I will get to them once I've finished here. So the Aussie New Zealand, I really like long positions here. I was looking to be a buyer actually quite a while ago. I think it was during this period here, but it was way too messy. I couldn't really justify it. So I'm back on the idea. Took me some time. We've got the New Zealand dollars facing downside risks from further the New Zealand dollar faces further downside risk from the RBNZ and the potential cuts in the future. The Australian dollar is benefiting from relative stability plus China exposure. So if you don't know, obviously the Australian dollar is heavily tied to the Chinese economy. So if the Chinese economy is doing well, you can expect the Australian economy to be doing well similarly. We've also got Barclays. They're in a long position here. So again, we do have some bank alignment with this idea. Now, I would really like to see this market come back down into the lows. We may have missed the entry here, unfortunately, just because it's been tested so many times. We're now back into sort of this resistance level that could see a rejection. We could see price come back down and sort of stay range bound a little bit before going higher. I don't know. Obviously, if I did know, I'd be a multi-trillionaire, but we'll not go into that right now. So if we could come back down to this low, it would make a lot of sense to me. Again, using this 200 moving average as a sort of a dynamic support, and in this case, a little bit of a mean reversion here would be great. So I think it's a very, very straightforward trade. There's not really too much complexities behind this one. Oil. Now, oil is mainly a price action trade. However, it is also backed up slightly by some fundamentals. I'm not an oil trader, generally speaking, so I don't have loads and loads of research for this one. However, the demand concerns from the US and China are still weak, and it's weighing on oil as well. The other side of that, however, the tensions or global tensions, we've got Russia, Ukraine, Middle East, are still providing some support for oil. But again, this is where the price action view comes into play. We are continuing to see oil in a bearish market. I mean, it's not really done anything other than fall since 2023. So you could say, yes, we've had some pullbacks, we've had some moves to the upside, but you can see that in any market. That's just a typical downtrend with pullbacks. So you could have said, this was a great place for buyers to potentially get back in. Here as well, we did see an opportunity for buyers to step back in. Each time they have failed and this market is going down. So I'm very happy to, again, just use this 200 moving average as a guide so we could look and see, okay, well, potentially we could end up looking at something like this and then potentially some lower prices back into the low at 55.6, give or take. So oil is tricky. As I said, it's not my forte. It's not something I'm specialized in, really. I'm not sure if you can hear the shouting outside. I apologize. There's a cricket match going on in the field just behind. However, if I do take it, it will be lower risk. The DAX, I think, does have further upside, although, it's the same thing with a lot of the indices. You could say the same. Dow, NASDAQ, not US 30, the S&P 500 and the DAX all drift to the upside, even the FTSE. So on the idea that we have created such a strong resistance leads me to think we're on the way for a pretty strong breakout. If we don't get the breakout, fine, we're in for a deeper pullback, but who cares? That's just a 1% loss if that does happen. So I would be looking to be a buyer of the DAX at some point. Again, 200 moving average, dynamic support, we pull back in, and then we continue higher, and then possibly scale in on retracements, or in this case, specifically a break and retest of the resistance we've created here. I don't think we've got anything else. Oh, we've got dollar yen left. So dollar yen's actually probably the most simple one. So again, just relating back to the Fed cuts and the pretty poor data we've had out of the US recently, the dollar remains pressured. We should all be fully aware of that. The yen, so the Bank of Japan does have the opportunity to potentially hike rates in the upcoming meeting. I'm not saying that is going to happen, but it definitely could. With the potential risk on that we are going to see from the Trump and Putin meeting, we might see a slight gap. I would be doubtful. I don't think that was a nearly impactful meeting to drive any sort of gaps or anything like that. But we could see some slow upside grind as we do see the yen and risk off assets take a little bit of a hit. But generally speaking, I would be very, very happy to go short dollar yen over the longer term. Again, just using that yen stability. Oh, well, actually not stability, that's probably a completely wrong word to use for the yen. Yen safe haven, I guess we would use, and also the weaker dollar and potential rate hikes as well by the Bank of Japan that does narrow that rate differential that we've got between the dollar and the yen. Obviously then reducing investor sentiment or investors' interest in being a buyer of dollar yen and slowly and gradually grinding out those carry trade players. So just before we move on, well, actually, this is kind of the last segment for today. So we'll just do a quick look at the edge finder. So you'll see pretty much what I've got. So we've got the DAX is bullish. Silver, I actually didn't mark up silver because I'd rather be in gold. However, silver is also a great candidate. So if you do like to trade silver, that's also an option. Dollar yen, very bearish, as we've already covered. Euro pound, actually, I didn't add, but Euro pound could be a great play. I think I'm going to do a specific video on Euro Pound, however, because I've been in a long-term DCA short, so I want to make a bit more of an in-depth video about that one. So again, I'll leave that for now. Euro dollar is getting a bullish reading, so again, does line up with what we're already looking at. General market sentiment does remain risk on. Of course, it is the weekend, so I'm not actually sure if this updates over the weekend. I'm fairly sure it does, though. So yeah, overall, we're looking pretty healthy to continue into the week. We do have some news to pay attention to, although I don't think it's overwhelming. Let me just let me filter this. Just give me a second here. Yes, so we've got CPI for Canada. I don't trade the CAD really, but that might be worth paying attention to if you do trade it, of course. We do have CPI for the UK, which of course, if we're looking to trade either Euro Pound or the Pound Dollar, then this is, again, is quite important. FOMC minutes, of course, will be important. So Wednesday is when it starts getting a bit more interesting. We do have the Jackson Hole Symposium. We've got some PMIs here for Europe and Germany. PMIs for the UK, retail sales for the UK as well on Friday, and then we've got a Fed Chair Powell speech on Friday as well. So I would say Wednesday onwards this week, pay attention to the calendar, because it could be, I'm not going to say messy, because it could be good, but it will be a little bit volatile, so just make sure you know what you're trading into. Bank trades is the thing I'll leave you with, so again, feel free to screenshot it. I will put it into the Discord tomorrow morning when I do my daily analysis, but if you want it now, screenshot it, because I'm not going to read all of these off. But as you can see, as I said earlier, we do have a lot of banks already in the euro dollar long idea, so that's quite a nice supportive thing for us. Sean's thinking a cheeky Indian. Oh, I do like an Indian. No territorial decisions, conversations could be having with Ukraine, interesting. Phantom, you didn't miss too much. I've got no idea when you joined though, so you might have missed some things, but it's always recorded, so don't worry. No, Putin, yeah, Putin. Yes, actually, as Sean said, the gold range could be broken now. Maybe. It's tricky because this is a market where it's just so flat, you cannot do anything unless you're a range trader. If you're a range trader, you would have had loads of fun, you've made lots of money. However, for directional traders, which the majority of traders are directional, there is nothing to do, and there hasn't been anything to do on gold really since April. It's like the market's just waiting for something, and that something could be just continued weaker US dollar data, Fed cuts to come into play, or it could reverse. It could be waiting, well, it's waiting for either one, obviously. But on the other side of that, rather than it gaining strength, it could lose strength. So if we see, again, US dollar data starting to come out stronger, if we see situations within geopolitics start to resolve, so again, Russia, Ukraine, Middle East, we could start seeing gold seeing lower prices. We do have a lot of room, actually. Gold does want to pull back. It could be a hefty trade to be in. We could make a lot of money. But then the argument is, where the hell would you sell gold to? And you're going to be a massive anti-trade trader, and that's it, or counter-trade trader, I should say. So either way, we will see. I am slightly bullish on gold, but it's now a case of waiting for that entry. So guys, that covers this week. We have pretty much gone over everything of interest in my view. I assume there's no questions. If there was, then you would have typed it already. Guys, have a great week. I will speak to you all soon. And if you're in the UK, go and enjoy this nice weather, because it probably won't last much longer. Have a good one. I'll speak to you all tomorrow. And yeah, stay safe.